Hey Esteban, what's your rate? This is a question I get from a lot of clients or a lot of prospects looking to get into a home. And although it's a great question, the question they're really asking is what's your cost? When comparing from lender to lender, all of them have the same interest rates. The difference between each lender is the cost associated with each of those interest rates. So one lender's cost for one rate may be lower than another lender's cost for the same interest rate. So today, what I'm going to dive into here is what's known as an official loan estimate, and this is a standardized document that every lender is required to provide to you once they complete your application. Going into the loan estimate here, you'll see at the top left the today's date, the borrower's name, their address, the property address, and very important, the sales price or estimated value. At the top right, you'll see the loan term, in this case 360 months or 30 years. Purpose of purchase, fixed rate product, right? Very important. And then the loan type in this scenario is an FHA loan. And down below, is the interest rate locked? In this scenario, it is not locked. The loan amount in this scenario is $333,841. This amount cannot increase over time. So when you close on your loan, generally your loan is not going to go up. However, if it does, you will be able to tell if it will right here on your loan estimate. And the same goes for the interest rate. Most interest rates are going to be fixed unless you're doing an interesting program. In this case, it's 5.125 and it will not go up over after closing. Principal and interest payment, $1,817. This will not go up over time. This is the key to home ownership and building equity and wealth. When you purchase a home, you fix your living expenses or your housing expense. And so your principal and interest payment, which is the loan, will not go up over time. Your taxes and insurance may go up over time as your property appreciates. Once things get worth more, you get taxed more and more costly to insure. But in this case, your principal and interest payment stays the same. There is no prepayment penalty on this loan. Most cases you won't have one unless you're doing a non-QM program like a bank statement loan or a debt service coverage ratio loan or hard money loan. But in most cases you're not going to have a prepayment penalty, but that's where you would check. And then also a balloon payment. Most of the time you're not going to have a balloon payment, pretty rare to see those. Now going under projected payments, principal and interest plus your mortgage insurance plus your estimated escrow, your insurance and your property taxes. In this scenario, it's $65 for insurance and $160 for taxes, which would add up to $225. If you add all this up, you get $2,191. That is the housing payment, right? The taxes, insurance, principal, and interest, or known as PITI in the mortgage realm. Down below, you'll see a breakdown of estimated taxes, insurance, and assessments, which is pretty much just a reiteration of you're going to pay taxes, insurance. Your taxes and insurance are included in the escrow. However, your HOA, if you got one, is not. So HOAs are paid outside of the taxes and insurance or the escrow account. Now, your qualification does factor in your HOA payment. However, that is something for you to remember. You don't pay that in your monthly, and it says that right there. It's not in your escrow payment. In this scenario, estimated closing costs $15,007 and estimated cash to close $10,966. I guess they put that there so you can quickly take a look at that figure and maybe compare, but it doesn't really give you much information. And that's because all the breakdown is on the second page of the loan estimate. So going into the second page, the closing cost detail sheet, probably the most important part is item A on a loan estimate. This is the lender charge associated with your loan, or origination charge. In this scenario, there are $3,800 in points or prepaid interest. This is what's known as an interest rate buy down. And by investing that money up front at the beginning of the loan, you get a lower interest rate for the life of the loan. So on this estimate, paying the $3,800 up front will get you all the way down to the 5.125%. This also has an underwriting fee, which is an administrative fee. However, if you add everything up, you'll get this $4,864 figure. Now, a lot of lenders may have other charges, processing, maybe something else on there. However, really what's most important is how much is everything added up. And that's really what you're comparing when you're looking at a loan estimate from two different providers. You just have to make sure that all the variables on each estimate are the same. So the estimated value is the same, the down payment, the loan amount is the same, the interest rate is the same, and the loan program is the same. You want to make sure you're comparing apples to apples, and right here you'll see the cost difference between each lender for the same exact rate, and you'll see who is providing you a better deal. Item B, services you cannot shop for: appraisal, credit report, upfront mortgage insurance premium. In this case, for the FHA, this is standard. It's a hefty fee. However, it gets the job done. Flood certificate, MERS registration, tax. This may vary a little bit from lender to lender and depending on the property type that you're purchasing. If there's a condo, you may have some condo fees associated with that here. But adding everything up, $6,580. And then item C, going down, services you can shop for. Every time you do a new mortgage or generally a real estate deal, there's a title company involved. They handle the money and title insurance. This amount you can shop for. So if you want to shop for your title service, I recommend doing that before you start sending offers out. Generally, realtors will have a title company they'll refer you to. Lenders can refer you to a title company, but it is a service you can shop for. In this scenario, the estimate is just under $1,500. So if you add everything up here, you'll get $12,921 at the bottom, the total closing cost. This is really the cost associated with originating this loan, and I'll kind of go into that a little more detail here up to the right. Other costs, taxes and other government fees. This has a $200 recording fee. That amount just varies. It depends on what county you're in the state or the country. Some charge $60, some charge $1,200. Just depends on where you're at. Most cases, Arizona is very inexpensive. Prepaids, depending on when you close in the month, you are going to pay prepaid interest for the remaining days of that month. So say you were to close on like the 16th and there's 14 days left of that month, the lender is going to collect prepaid interest for the remaining days. So at 5.125%, and this loan amount, you accrue interest at $46.88 per day. Adding all that up, that brings the prepaid interest amount to $656. Hazard insurance is also a prepaid. They typically charge an annual premium up front. In this case, 12 months at $65 is $780, and that's how we arrive to the $1,400 figure there for your prepaids. Now, the prepaid interest it's not necessarily a lender charge, as I was saying before, because you're basically paying for being able to live in that house for that the remaining days of that beginning month that you owning that home. So you're paying your mortgage. So it's not necessarily a charge that the lender or the title company or the appraiser is charging you. That's just a cost of owning the home. Item G, initial escrow payment at closing. If you put less than 20% down on your mortgage, or you're doing a government loan, your mortgage payment is required to be escrowed. It is required to include taxes and insurance. So if you are required to have an escrowed payment, you have to create a new escrow account. And that account will typically have a buffer. And so in this scenario, the lender is collecting 2 months of taxes and insurance for that escrow buffer. So $450 total. Now, this amount on a loan estimate will vary from lender to lender. However, it doesn't really matter, because what really matters is when you're closing, right, and when your taxes are due. And depending on that, that's what really dictates how much you pay there. Each lender may quote a different amount, but at the closing table, every lender is going to collect the same amount. So some might be higher, some might be lower, but it's not relevant to, the actual total, the actual origination cost associated with your loan. And so that's why I say really what's most important are items A, B, and C, because that's really what you're paying in terms of the transaction cost to get into your place or refinance your home. The other ones, your escrow payment, that's just your money sitting in an account to pay taxes and insurance when they're due. And the prepaids, that's just you prepaying your mortgage for those beginning days, or for the remaining days of the month that you close. Now, if you add everything up, right, total other costs is $2,000 plus the total loan costs. That's how you arrive to your $15,007 for your total closing costs. Now, calculating your cash to close down here at the bottom, your total closing cost figure plus your down payment funds required, right? So these two added up, bringing about $21,159 minus your seller credits. So in this scenario, we're getting 3% back from the seller for the closing cost. If we do the math there, that leaves us with an estimated cash to close of $10,966. So just under 11 grand to do this loan. Now, this is a pretty good example of what some of the FHA loans are looking like right now. But really just depends on what you negotiate. However, I hope that going through this loan estimate is useful for you if you are home shopping, and you can go ahead and request the loan estimate from each lender, and then take that loan estimate and compare one to another, and just make sure you're getting a fair offer. But this is how you break down the costs and how each of the costs are allocated to the different parties and different variables associated with them. So if you have any questions on your loan estimate, or have any other questions, or have another scenario that you would like to review, just shoot me a message or give me a call, and I would love to do that for you. Let me know. I appreciate you watching this video.